right, fam, so when it comes to the stock market, one of the most crucial tools that any of us can have is learning how to pick stocks. Listen, today in this video, I'm gonna walk you through 4 key ingredients that you need on how to pick stocks, and then at the end of the video, I'm gonna lay out the rules for you. And if you follow these rules, I promise you it's gonna change your life. Listen, y'all know your boy the Wallstreet Trapper. I've beat the market 3 years in a row. We're working on year 4 at beating the market from a stock picking perspective, and then we dominate in the options market as well. This one here is gonna take you to another level. If you're a new investor, it's gonna take you to another level. If you're an intermediate investor, it's gonna take you to another level. I promise these 4 ingredients will 100% take you to another level, and it'll help you see the market in a way that a lot of people can't see it. My goal is to help get the confusion out of the game, and as you get the confusion out of the game, you start walking through the game in a way that you can understand. Now you start fearing the market, and you start embracing the market. And so today we're gonna walk you through that. So first, man, I want you to like, I want you to subscribe, and I want you to share this to somebody that you know that you won't make some money in the market too. But lastly, after you watch everything in the video, I want you to go in the comments and tell us, ask questions in the comments. Like, we won't change the game on that. Ask us some questions in the comments, ask us what you need, and we going to, myself and my team, man, we gonna help you. We gonna answer them questions so we can really get into it. Let's go, man. All right, when it comes to picking stocks, I don't believe in the just buy ETFs and index funds for the rest of your life. You're gonna make money on it, but it's gonna take you forever to be a millionaire. I'm gonna be real with you. The goal is for us to compress the time that it takes for us to be a millionaire in this game, right? And so I'm gonna give you 4 ingredients that you need to learn when it comes to picking stocks. The first ingredient, you probably heard this word before, but I won't really go in depth with it, right? It's your circle of competence. Now, what does that mean? Your circle of competence is only invest in stocks that you have a right, watch this, here's the word we're gonna go with, understanding. I do not believe that you should invest in what you use, right? But I do believe that you should only invest in what you understand. So let's break that out, right? Like, when it comes to understanding, what does that look like, Trap? Like, my circle of competence, right? So one, we're gonna go with, do you understand, watch what I'm about to do here, how they make money? I'm not gonna stop right there. I'm gonna go a little further and say, as the core business. Right? So when you think about Walmart, right? Walmart is what? A low price leader, right? So you understand that they make money by doing what? Selling products at what? The lowest prices. Walmart never said that we have the best products. The second way what Walmart does is they position their company. If you go look at Walmart, one of the things that they really do well is location. They position their every Walmart at least 10 miles, maximum 10 to 12 miles from its consumers. So it's the Walmart, whether it's the super Walmart, whether it's the neighborhood Walmart, right? They make sure they position the Walmart no more than 10 to 12 miles from their consumer, their ideal consumer. So that puts them in a position to do what? Consistently make money, right? And so what we need to learn is, do you understand how they make money at their core? The second thing I want you to understand is this. Watch this. Who is their core consumer? That's important. Why is that important, Trap? Because if I know how they make money, I need to also know who they selling the product to. Now I'm gonna take it back to the streets, right? I'm gonna keep it real with you. When I was in the streets, I understood who my clientele was, and I understood how to serve them at a high level. And so when people came around that wasn't my clientele, I'd be like, that ain't for me. You know what I'm saying? I don't sell that. I don't know nobody who do that. I understood who my clientele was, right? So one is understanding who the clientele is. The next one, and here's why I said this, understanding them. Watch this. Do you understand company vision? Do you understand the vision of the brand? Where they trying to go at? And that comes with what? My goal is to take you not from just being somebody that look at stocks, like I enjoy the market. So I listen to earnings calls, right? I listen to reports. When they put out reports and what's called a 13F talking about investors buying what, I want to see that. When I look at an 8K, when they saying they did this specific thing, I want to know that. Like, you can't just look at this game and I'm going to make some money in it. In order to really make money in it, you got to go through a little process, y'all. We can't say we want to skip the process. If we know for a fact this game can change our life, think about this as kids. A lot of our parents put us in sports as a youngins because they know that a lot of us, our only way out the hood is by playing sports. Right? That's why. So what they do, they put them in all, and they make them take it serious. But some of us, we don't take it. We like, yo, I don't really want to play football like that. Like, I really don't want to play baseball like that. I really don't want to play like basketball like that. I'll play it. I'm a hooper in the park, but I don't want to go to the NBA. I don't want to go to the NFL. But the ones that took it serious, you got some of your partners that was going, they was in basketball in school, playground basketball, AAU, summer basketball camps. They people flying them out. You like, oh, that boy going to the league. Oh, that boy good. Right? So the people who take it the best, the serious. I take this game serious because I probably watch CNBC, Bloomberg, Fox, reading subscriptions like the average person watch ESPN, like the average man watch ESPN, like the average elderly person watch a soap opera. So that's important. So do you understand their core business? Do you understand their core client? And watch this, do you understand the vision of the company? So we need to understand these things. I want y'all to literally just don't even take a lot of stocks. I want you to watch this. I want you to just take 5 stocks that you really say, you know what, I like these companies. I don't know why, I like them. And I want you to go just read up on them. Just read up and just use Google. Who is Apple's core client? What is Apple's business model? How does Apple make money at its core business, right? So that's important. The next thing, watch this. Financial, watch this. Stability, and watch this, financially sustainability. What does that mean, Trap? Financial stability means we stable as a company. Matter of fact, I want to change this one from sustainability to, watch this, financially scalable. Here's why. Because if a company can scale financially, that means, watch this, they can bring other products to the marketplace. Now that's a force of sustainability, but now we want to take it to scalability, right? So we want to be able to say, can this company present a new product to the marketplace, and that takes off as well? That does real as well. Does that customer base still lock in on that? But first, let's get to the, what's this, stability. I'm gonna be real with y'all. First thing, go look at a company's debt to equity ratio. If a company got more debt than equity, go look at their cash to debt ratio. If they got more debt than cash, they not sustainable. They not sustainable and they not scalable. We seeing a company grow, but you gotta ask yourself, at what cost are they growing? So let's talk about that for a second. So when we talking about a company's stability, watch this. Is the company paying us a dividend? And if they're paying us a dividend, do they have a lot of debt? I'm gonna tell you why that's not stable. That's not stability. Because if a company is paying us a dividend and they got more cash than equity, if a company is paying us a dividend and they have more debt, right, then that's saying that they're gonna keep going in debt to pay us this dividend, which is not good. What we'd rather see them do is cut the dividend to take off the debt, right? Because it's happening. If we get in a troubled time again, like a pandemic or something like that, guess what's gonna happen? They're gonna freeze the dividend. They're gonna cut the dividend. Now the reason why you bought the stock is not even none of them. So we gotta understand that. I want you to find a company. How do we do that, Trap? We go look at the financial reports. Now you don't gotta be a rocket scientist. You just gonna go look at this. Does this company have more assets than liabilities? Does this company have more cash than it does debt? Watch this. Are they paying down the debt? You'll see that in the balance sheet. That's a company that's going to stability. And then if you're not stable, you definitely can't be what? Scalable. So is the company, I know you're like, damn, Trap, that's a lot. I'm gonna ask you a question. Being a millionaire, do you want to be one or not? Do you want this game to buy back your freedom or not? Right? Scalability. Prime example, you can go to Starbucks and they'll sell you a coffee, they'll sell you a tea, they sell you a Frappuccino. Now you go in there, they got orange juice, they done created a turkey Danish, they got all kind of stuff now. Then guess what? You know how we know they scalable? They even got the CEO from Chipotle and the company just blew earnings through the roof. In 1 quarter, Starbucks is transitioning to a more stable company and a scalable company. Guess one of the things they just did? Hey, all y'all can't use my free Wi-Fi no more. Yeah, if you're not in here, cause you taking up room from my people. You at least gotta come in here and buy something. Here's what they realized. You coming in here, hey, let's have a Starbucks meeting. But you coming in here and you just sitting down. You want something? Nah, I'm good. Hey, you can't use this Wi-Fi, fam. That forces you to do what? At least buy something. Guess what that does? Hey, make the balance sheet better. Woohoo! Come on! Come on! All right, next, here's what we want. We want a company where they what? Moat. And I know you're gonna be like, man, Trap, like, it's hard for me to figure out what that moat is. They be saying stuff. All right, so watch this. Here's how we know a company got a moat. And I think I'm gonna do a video on like the different type of moats so y'all can understand it. But moats more than anything gonna show up in your company's ability to have an advantage over its competitors. Like, let's talk about something for a second. When we think about Costco, right? So when people think Costco, they always think like, all right, Trap, well, Costco, its biggest competitor is Sam's, and that's true. And the two actually are actually really great. Sam's gonna fall on a Walmart brand, but watch this. Here's why Costco makes so much money. One, the model that Costco has is a subscription-based model. 97% of the customers that are on the Costco brand, they have a 97% retention rate. I'm sorry. They have a 97% retention rate, means 97% of the people are going to do what? Renew. And then they say that the average person stays with them for 4 years. So now they understood the life expectancy of a customer. That in itself is a strong moat, because that's called predictable bread. Remember we talked about something earlier. Do you understand the company? I understand the company and how they make money. Their core business is what? Subscription. So here's what Costco would do. Costco doesn't mind taking the loss on some of its products because they're gonna make it up from you in the long run on what? The subscription. But Costco went a little further. They said the average person spends about, I think it's $219 every time they make a trip. So now, once they understood that, they can bake the pricing model, plus the subscription model. They bake that in, they understand, okay, well, we're gonna make this per customer. Right? This is the life expectancy. So if this customer comes this many times a year and they spend on average this much plus the subscription, we can take this much of a loss on our products and still make a profit. That's understanding the moat. Now, when you go in Costco, guess what? You don't go in Costco like you go in these other stores. When you go in Costco, it's simple. It's a shell. They got stuff on pallets. You know why? Because they understand, I don't got to make this beautiful for you. Part of their business model is what? Efficiency, not looking beautiful. Part of Walmart business model is what? Low price, not quality. Costco say, we'll give you quality, but we're gonna give you efficiency when you come in, and we're gonna give it to you in bulk. So it's understanding this is what makes them a strong company. One of the ways you can see if a company has a strong moat, go look at their net margin. If they got a net margin of 10 or more, that's telling you that they making 10% of the revenue is profit. So much, right? So they make $1, 10 cents of that dollar is profit. That's good. So that's how you understand moat. Ask yourself that question, like, how does this company, even though it's in competition with this, what makes them unique? Right? What makes them unique? This is why I like companies like ASML, companies like Taiwan Semiconductor. You know why? Because they actually produce the chips they make them. Right? So you want to see that. Now, at one time it was a branding moat just because of the name alone. That kind of wear it off. Now you got to have pricing power, network effect. I'm going to make a video on that. That's going to be real good. And the last thing I want to talk to you about that you need to learn is price. What am I willing to pay for this company? Now, here's the thing that gets most people. I'm not going to even get into the discount, and I'm not going to get into all that. What I'm going to say is you got to have a price that you're willing to pay for a stock. And if it goes above that, you got to say, I'm good. And every so many months, what you need to do is reevaluate that stock. Most people have an issue is because they feel like they can pay whatever for a stock because it's gonna keep running. And that's not the case. Now, what I will tell you is this. If you can get a stock to fall 10% from its 52-week high, that's always a good buying point. If you can get a stock that's 20% from its 52-week high, that's always a buying point. Other than that, you need to have price points, and you get that first by understanding what's the value of this company. And what I mean by 52-week high, you'll see that on any site you go on, it'll say 52-week high, 52-week low. Go see what that 52-week high is. If you can get that stock any 10, 20% from that, you good. Another one, if you can get a stock on its 200-day moving average, that's good, right? So you gotta have these things. So circle of competence is good. Financial stability is good. Financial scalability is good. Understanding those three things right there. The next one, does this company have a moat or not? That's good. And the last one is price. Now, let me give you this before we go. I want you to look at this right here. I'm gonna write this down for you. Watch this. Follow these. Aura, U-L-E-S. Reason, understand, longevity, expansion, simple. Those are my rules to investing. If you take them four ingredients and you mix them ingredients with these rules, ooh, look what I just said. Listen to what I just said. If you mix the four ingredients that I gave you with these rules, what's the reason why I'm here? Do I understand a company? Does it have longevity? Can it expand? And is it simple? If you mix those four ingredients with those rules, I promise you, it's gonna change the game for you. It's your boy, the Wallstreet Trapper, man. I love y'all, I appreciate y'all. Make sure you like, make sure you subscribe, make sure you tell us below any questions or how this video helped or anything, let us know. Make sure you tap into our every Tuesday, 7 p.m. Eastern time on YouTube. The Wall Street Looks Like Us and our network. Check out our show, Trapping Tuesdays, man. And last but not least, that's not me in the chat telling you WhatsApp, Bitcoin, and all these other things. Don't fall for it, man. It's your boy, Wall Street Trapper. I love y'all. Go look at another video, man.